are live. 5 seconds in, 7 seconds in, just the countdown's going up. I am Ryan Dunstan with East Main Street Insurance. As always, my good fellow colleague Chris Kamara with Cobalt Insurance. Chris, we should just really quickly, bring into the conversation before we hop into our podcast today about your prestigious award that you've recently been bestowed. And how
Yeah.
can you share with me? Tell me what's going on.
Yeah, let me bring that up over here real quick.
What was it? I know what it
didn't
was,
even
but
think
I
of
want
that.
you to share it because
Yeah,
it's
I didn't
amazing.
even think of that, but yeah, so we got another award. We got awarded Insurance Agent Placer Herald's Best of the Best 2025 for Rockland. So
Wow.
we added up to our wall of achievements here, and very, very thankful for those that have voted for us and the clients that we get to serve.
Yeah. You're going to need a bigger wall here pretty soon.
Well, my website's pretty busy. It's got information, it's got the awards, it's got our YouTube videos,
Right.
It's got photos from events. I mean, I'm working on you, Ryan, to get you to do the same for your website. So, and your website has been revamped as well. It's much, much nicer.
It's coming along. It's a work in progress, kind of waiting on some other people to do some stuff, but I appreciate your feedback on it and trying to help get it up to speed so that way it just has a more fresh update to things, which is nice.
Yeah, make it easier for clients.
Yeah,
I'm just checking to make sure we went live on all of our socials, and I see that here on Facebook.
So while you're checking, I did see someone kind of pop in. So we are House Calls Home Insurance Podcast. If you have questions, comments, concerns in the home insurance market, we are here for you. We will answer the best we can. If not, find the best answer for you.
Absolutely.
With our skills.
So we are live.
Yeah.
1 second here.
We've
got some fun stuff to talk about.
Yeah, you went on. You were on the town hall, right?
Yeah, on Tuesday there was the. Bear with me a second. I'm gonna just flip this slide here. There was the California Department of Insurance statewide insurance town hall, and let me just close this real quick. I see that we're both live on Facebook. Your YouTube is live, but mine doesn't appear to have fired up. There it is. Okay. So now we're all working technologically.
All right, cool.
Sorry about that.
That's fine.
So yeah, on Tuesday, the California Department of Insurance put on a statewide insurance town hall. It was 120 minutes long, and we're going to parse that out into some easily digestible information. I think that's valuable to our audience. You can go on the either Facebook or the California Department of Insurance's website, and you can watch the video, the recording in full.
Oh, really? It was recorded. Nice.
Absolutely. And so there was, the speakers were our insurance commissioner, someone from CAL FIRE, Chief Daniel Berlant, and then someone from United Policyholders, Amy Bach. And she is, I didn't have her title on here. I'm sorry, but her title is she's the one that runs United Policyholders.
Yeah, and she's really great about putting out more data for insureds because everyone's kind of been in this renewal kind of understanding or teaching of how their insurance works or what to look for. Because everyone's had that set it and forget it mentality for 40 years. So
absolutely agree with that. She's also a very, very strong advocate for homeowners.
Yep, definitely is.
Okay, so moving to the next slide. Key information from the insurance commissioner, CAL FIRE, and United Policyholders. It really does reinforce the broken record that you and I have been on a couple of topics. It's becoming more and more a overall statewide approach to insurance. Giving some more updates, a little bit new updates on some stuff, and then actionable advice for homeowners.
Okay.
Cal Fire had some really good stuff on that, and if I was faster, I would pull it up. Actually, let me see. Bear with me just 1 second here. See how fast this loads. So one good thing about the recording is you could see some of the explanations, and I'm just trying to find one of them. So here we go. There was such a good, here we go, this part right here. And I'm just going to play this. Sorry, I didn't plan this, Ryan, but I figured.
No, that's great. I love how you're working on the fly now. I feel like you're starting to age, yourself a little bit in the industry.
But this is a super cool video, right? This part right here. I'm just going to turn off the sound and see if it'll load.
So this is kind of like the IBHS.
Yeah, but in a very more visual way to see how that works.
Well,
So
I like how this is like a condo, like down in kind of Roseville, Rockland area.
Yeah,
and there's still
52-minute mark. I'm going to refresh this and see if this,
there's still going to be landscaping that's going to be in front of your home and whatnot, even though you've got, looks like it was stucco on the siding and whatnot, that anything could really be flammable, take off.
I don't know why it's not loading. Hold on a second here.
Maybe my internet's not the best.
My internet's fast. It's YouTube's not appearing to cooperate here, but we're going to go to the 52-minute mark.
It's going to pop up an ad. I'm sure of it. Good old YouTube.
Oh, you think so?
Anytime anytime I usually fast forward it does it.
And when this comes back, we'll.
So
I'll jump over there.
So it sounds like he's really, hitting home on the sustainable insurance strategy. This is a lot of the mitigation stuff.
Oh, absolutely. Yeah, that's becoming a major focus.
Yeah.
So, okay, of course it loads when I'm away from it. You can see him talking, so it's running, but it's just the sound is off. I just want to show the images.
Yeah, that's fine.
Okay, so this is AI. I don't think this is real, but it's an example of how the initial flames itself, and we'll go over that in the slide, isn't the really big factor. It's the embers getting up against the house that causes it to burn. 5 feet dispensable space. I can still see the talking here on the right side, but it's just very slow. And the clock's counting. I wanted to go to the next slide there. That's what you were talking about with like a condo with some stucco, a little bit of brick on the bottom.
Yeah. But a lot of that vegetation is still eligible, catching, regardless if it's green or not. Mm-hmm. I don't know what kind of embers those are, but there's been a lot of fires that have been down in the valley. I would say there's been more of those than fires up here in the foothills as of late.
Yeah, there's been a few. Well, I wish this would load. I don't know why it's not, so I'm just going to jump off of it.
Okay.
We'll go to the slides, and then let me provide the link here. Actually,
yeah, throw the link in. That'd be good.
We did this last time we were here, and I don't remember how we did it. So I'm just going to stick it here in the chat, and then I'm going to show it right there. So that's the YouTube link. It's not any fancy link or anything. Even the description of the video itself, it's directly from the California Department of Insurance's YouTube page, but even it doesn't say the subject. It just says uploaded a day ago, and it doesn't even say that it was the town hall. It's just a video right here.
Yeah.
So, but yeah, they definitely went over all these points here. So hardened home with defensible space, 50% increased chance of surviving. Their focus, number one priority, zone 0, the first 5 feet from the home. Ember resistant, like we're talking about, rocks, pavers, concrete. Hardy board is a big one up in Grass Valley area. I have a lot of clients now that they very much keyed onto it. Like, yep, I've got hardy board. And
Yeah.
that's been helpful. Yeah, clearly focusing on this. And then jumping to the next slide. Oops.
And I think, but yeah, while you're going to the next slide, like the takeaway also from that is because this is that zone 0 and the sustainable insurance strategy, it's providing framework to the carriers and allowing them to show that insureds are doing their part to mitigate their homes and to be wildfire resilient. So that way, whenever the carriers come back into the marketplace and they're going to offer these credits, that people are going to take advantage of them because they're going to come in at a higher rate, you know? So they probably want people to be able to apply for credits as well.
And this was a pretty good explanation. I get it a lot from a lot of clients. You know, I'm not in a high fire zone. CAL FIRE maps aren't showing me in a high fire zone. This was a great explanation, and I'm not going to try and mess it up, so I'm just going to read it for here. But Chief Berlant did say hazard, CAL FIRE map. That's physical conditions like fuel, slope, and weather. And we as consumers cannot change that individually, right?
Right.
But risk, the insurer model, this is your Zesty AI. This is all the proprietary modeling that carriers use for their own determination if a house is eligible. Hazard, plus your mitigation, plus fire department response, how close a fire hydrant is, things that you can influence as a homeowner, or at least parts of it, right?
Right.
And then he did point out having a high hazard score doesn't automatically mean you'll be dropped if risk is low. So I like to compare it to 2 homes next to each other. One's overgrown with trees hanging over the roof, etc. And one that's cleared away all that, done all the mitigation, and think to myself, which risk would an insurance carrier want, right?
Right. Well, and I'll put in the chat too, real quick. Like, where is it? Oh, I thought we could. Oh, here it is.
I'll hide this one.
No, it's fine. I can put it here. So this is the area that you can go to find out your wildfire mitigation severity hazard. You know, whether you're high or model or medium or low. And then the Department of Insurance put out, geez, I think it's kind of as soon as these were come out that they're not utilized. They cannot be utilized for wildfire scoring, like you said, like the chief said, you know.
Mm-hmm. And then one thing I really want to point out, it says good maintenance and mitigation can open up new insurance options beyond the FAIR plan. And I put that caveat in there in the future. Today, we're still looking at the FAIR plan for quite a bit. This is, where are we at? 9 months into the sustainable insurance strategy?
Yeah.
So it's moving, it's happening, it's being discussed, and discounts are also being applied for the FAIR plan on a more granular level. But I don't see your traditional carriers entering the market right now in the places of higher wildfire risk. There's E&S carriers, and Ryan and I have been talking about that, but I'm just talking about preferred carriers, you know, those more well-recognized names, the admitted carriers. Cool.
Yeah, that's great. I would say that I had seen a few carriers that are trying to come back in, like with rate filings and whatnot.
You're really good on keeping an eye on those.
But it's, yeah, I mean, some of them are going to be coming in at a very higher rate for sure. And they're also those carriers that are associated with the IBHS, because they're using that formula that IBHS also puts out. I think it's very similar to the sustainable insurance strategy, but there are some more involved variants of it whenever it comes to wildfire mitigation.
What is IBHS again? I know the acronym.
That's such a great question. The Insurance Institute for Business and Home Safety.
Got it. Yeah, I know what it is. I can never remember it for some reason.
Yeah. No, thank you. Yeah, that's us in insurance. You know, talking that those acronym lingos all the time.
Moving to the next slide. I'll let you take this one. I got a cough. Sorry.
Okay. So what United policyholders say, consumer tips, is for affordability. Think of insurance for the big things and not the small things. So I know a lot of times whenever we're going over personal property levels, we want insureds to really kind of dive in and look at what they're insuring. Not just like, oh, I need $600,000 for my property because that's what I had before at my other level. Like maybe I only have 250, maybe I only have 300,000. So
maybe I'm in my early 20s and have only IKEA furniture, and I just don't know replacing that.
Yeah, just look at your big things because that's what you're going to need to replace. Consider raising your deductibles. I know you and I have really talked about doing that for insureds to try and help with offsetting that higher cost. 5,000, 10,000, sometimes 20,000 if it really makes sense. But it's having that conversation with your agent on whether or not you should have what your premium looks like with your deductible.
Yep. And while we're speaking to that deductible in general, we're talking about the California Fair Plan, right? Or more specific, actually.
More specific, I think. Yeah. I mean, other carriers do have either a regular deductible or they have a split deductible, which some of the new carriers have come into the market, or one had before. So finding out what that deductible is and maybe what you can do to play around with it. I know I did with my own, with my carrier, because it did increase pretty substantially. So yeah, it's having that conversation with your agent, finding out what premium is with the different deductible.
Absolutely.
And then start shopping right away on non-renewals. That's definitely great. I know I chatted with a lady and her husband yesterday for about 30 minutes. They are new to this and it's kind of crazy, but they are new to it this year. And it doesn't come up until January. So a lot of carriers don't have a renewal availability of like getting out a quote within 30 days. So yes, it's good to start shopping right away, but a lot of carriers and or agents are going to tell you you're going to need to wait 30 days before you're in our window of being able to quote this out. So, some people I have a heart for, and I'll work with them because they are new. But it's definitely good to start shopping right away. So what was the key takeaway? The valuable advice from a top consumer advocate: raising your deductible. That's always huge for managing premium, and reinforces why we're always searching for new market options for our clients. So, I know you and I are both always looking out for new carriers that are coming in. So, that's why it's always key to always talk with them on a quarterly basis. I feel like with how fluid things are.
Carriers? Oh yeah, absolutely. Oops. Moving to the next slide. So this one is new laws to help. So we did go over, I think 2 weeks ago, AB 888, and we looked it up, and it was passed into law. And I know I went over it in my newsletter last month, where it's passed into law. The legislature has not yet funded this, and once they fund it, then they could start giving out these grants. That's going to be huge, I think, for those that know they need to protect their homes, or they need to upgrade their homes, or change something, and these grant programs will help make that more affordable. So that's one that's on the up and coming, I think. SB 495 is super cool for most people. Like if you take an example, the Southern California wildfires, most carriers are going to give you a small amount, if I remember correctly, to pay for your personal belongings up front, and then you have to provide an itemized list. We tell people all the time to take your phone out. I don't know if it's going to show. Take your phone out, walk around your home, and get a video of all of your belongings. It'll make it a lot easier come claim time to figure out what you're filing for as far as your personal property. Yep. This Eliminate the List Act. After a total loss, home completely burns down, insurers must pay 60% of contents coverage up to $350,000 without requiring a list. So that's pretty good. And then SB 547, this one pertains directly to businesses, homeowners associations, and nonprofits after disaster. It's already been in place that carriers cannot non-renew homes within a certain declared disaster area. Let's say the home wasn't affected, right? But the carrier decides they just want to mitigate all their risk and start non-renewing all in that area.
Yeah.
They cannot do that for 1 year. And now it cannot be done for businesses, homeowners associations, and nonprofits as well.
Oh, that's awesome.
Do you know that one? I learned that one on the
Yeah.
on Tuesday.
Did you know what the criteria is for the area?
I do not. Yeah, I just learned this on Tuesday. So
Well,
I haven't dug into it.
Do you know it for for homeowners?
No. Do you know?
Yeah, I do.
Go for it.
So if your zip code is affected by the wildfire, all adjoining zip codes to your zip code get the 1 year moratorium. So if that was kind of good for us in our area because we had a fire, the river fire. Geez, I wish I could remember. I want to say it was 2020, maybe 21.
Mhm.
And it was 95945. But because of our zip codes being so close to each other, it basically helped the entire county basically from being canceled.
Non-renewed, right? They still
non-renewed for 1 year. Yeah.
Is that correct? The increases would still apply.
Yeah, increases would still apply, but yeah, the non-renewal thing. And that can also be found on the Department of Insurance website. We should probably I could put up that. I'll put that up in the chat while you're getting that ready.
Okay. Moving to the next slide. What it all means. The number one thing I heard as I was listening, because I listened to the entire town hall, and it's mitigate your home. More and more focus will be on defensible space. Qualify, like we went over previously, about more granular discounts and possibly discounts with other carriers. And then AB 888, the law was passed, but still needs to be funded. I want to make that part clear. And then SB 495, that's the personal property piece. That I think that's a win for homeowners.
The 888.
495, the one you don't have to provide an itemized.
Oh, the list. Yeah, I feel like the list is probably the best for a home. I mean, you lose your house, and now you got to tell your insurance company every single thing and give them a list of every single thing that you had. Like, especially if you don't
all the
remember
things
it.
you're dealing with. Yeah,
especially if you don't remember it. I mean, that's huge.
Totally. Oh, you added it here. Let me see. That's the moratorium link in the chat and on the screen.
Yeah, so you go directly there, and then there's a site that lets you input your zip code and tell you if you've been affected. I quickly went back to see what year that the river fire was, and it was in 2020.
Okay. All right, so I'm going to take that off, and then last slide. Pretty straightforward. I think it's your typical presentation. Tell you what we're going to say what we're going to say, and tell you what we said. So, right? That's a good presentation. So,
yeah,
the market's complex, and it's great to see that the town hall is reflecting what we have been talking about in the last few podcasts. So, we're on the right page, and we're definitely bringing you timely information. Definitely talk to your agent about mitigation, discounts, and carrier options. I know that Ryan has a carrier that he's been writing with, and they've been very competitive. And we're here to help. We're here to answer any questions you may have, whether you're a client or not. Anything you want to add to that, Ryan?
No, I mean, other than just the upcoming FAIR Plan mitigation change that's happening on November 15th. So,
yep, that's pretty big.
Yeah, that's
pretty
large.
Did we go over? I don't think. Oh, we skipped 2 weeks, right? Let me share this. Ryan gave information. We created a tool together. We didn't share that here on the podcast, right, Ryan?
I don't think so. No. Let's put it in the chat.
this screen over here. And so you can go to teamcia.net. You can enter your zip code. And this is from October 15th, so about 2 weeks ago.
Yep.
Ryan shared that the California Fair Plan filed for a rate increase. And then we created this simple tool to see what the proposed increase is by zip code.
Right.
What's your zip code there in Grass Valley, Ryan?
95945.
So you can see here for 95945, there's about 3,768 policies in that zip code. There's 13 million of premium in force.
That checks out.
The proposed increase would take it to 16.5 roughly, and that's a 22.7% increase. Your average policyholder will see a rate increase annually of $815. And then the maximum rate increase would be $6,407 for that zip code.
Wow.
And what I'm seeing here in my brain is proposed impact of 22.7, average rate impact of 28.6 as a weighted average, right? So if you're paying $1,000, now you're going to be paying 28.6, so $1,300.
Yeah.
And I know that's really unreasonable, but it's simple math I can do in my head. Yeah, you can get this directly from the from the National Association of Insurance Commissioners website. We just made it simple and easy to plug in any zip code you want and get the information.
What's one where you're at? What's a good, hot, heavily weighted zip code?
Loomis. What's the zip code for Loomis? Let me see.
900. No, maybe
95650. Let's try that.
956. Yeah.
956. So there's 621 policies, and it's 2.6 million in coverage. They're trying to go to 3.5 in premium. The rate impact or proposed rate is 30% plus. So pretty significant for Loomis.
Here's the thing, though, is that that's premium. I could only imagine what actual limit coverage is.
Oh, whether they cap out or not?
Well, if you're an insured and you're insured at 1 million or 750,000, what's the average dwelling limit coverage, and does that dwelling limit coverage even come close to what the area's premium is?
$4,300 for the average fair plan policy in Loomis.
No, I mean like coverage A. Like coverage A is 750,000.
Yeah, I get what you're saying. I don't know.
Yeah,
there's no coverages here. This is just premium, right?
Yeah.
So if you did just an averaging, right, you take 2,687,826 divided by 621 policies. Your average annual premium by policy is about $4,300 in Loomis. If you take that full in-force premium, and let me restate this here. This is just a filing, not the final rate. So
not the final.
It's going to change, hopefully go lower, but this is just an indication of what they're filing for. But if we take 3,051,502 divided by that same 621 policies, 5,600 for just the fair plan on average in Loomis. And yeah, I don't know if it's going to make that, if there'll be even room in the coverage A's to increase that. Yeah, like you're saying, right? I mean, it doesn't change the coverage A's. It's just whether or not they're insured to value.
Well, you guys, that's weird. It's getting a higher rate percentage than Grass Valley.
Yeah, I don't have the logic. I just took the database and I made the tool.
Yeah.
So. And then the granular one, I mean, I don't think we showed that. I'll pull it up right now. Give me just a second here. Did we go over the newsletters? I don't think we went over the newsletters either.
I don't think so, because they're still pretty fresh.
Yeah.
Which is
let me pull that up. So my agency newsletter went out early October, early for once. October 17th, early for once. And it went over what we touched touched on in our podcast, so AB 88. And it says right here, the program's authorized. Now the state just needs to write the check to get the money flowing to homeowners who need it most. And then this is the more granular discounts we had talked about in a very quick format. There's 5 possible discounts for immediate surroundings, 5 for structures, 1 property, 1 community, so 12 total possible discounts, which is really just granular of the same discounts, so you can qualify individually for these. That was it. I think we're caught up now.
I was going to also say that on renewals now, if your renewal date is after 11/15, the Fair Plan quotes for your renewal does show how much of your premium can be lowered by qualifying for the individual items.
Does it show it by item?
It does.
Outstanding.
Yeah. I was trying to see if I could pull up a quick renewal quote that I have and I could show. I know that I popped it in
You keep looking. I'm going to pull this back over here and we're going to try and see if this video loads now.
Okay.
It's running. And I have it muted, but I just want to show the images. To see how fast a fire does grow with the wind and if it gets a foothold, like I said, with those embers touching the home, right?
Yeah. Okay. I have this pulled up too.
Oh, so that one's not actually, no, none of it was AI. That's a real room.
Yeah, I would say it is. Looked real.
It looked pretty fake to me, but that's a real room where they simulated it. Very cool. You got it up?
Yeah, I do.
All right, I'll pull this over. Go ahead, share. Oh, you shared it. Great.
So yeah, I'm sharing the screen. Let me make it bigger for you all to see. So it does say up here again about the reducing of the portion for the entire level. Oops. And then this, if you say yes or no to, if you were to say yes, then this is how much premium reduction it is going to decrease. So I would say that 1 to 2% that I had mentioned earlier is probably about what it's at.
Yeah, if you can get 12% off of your premium, that's great.
Yeah. And that's it. But it does show, if you look on your renewal, this is on page 59 of 60. So whenever you get your renewal PDF from your agent, go all the way down to the bottom, and that's where it'll be. Because now in renewals, it's so nice. They give you the earthquake offer. They give you a full copy of the policy, all 40 pages of it. So that part's cool because a lot of people never got that. And then obviously now the discounts. So that is all.
I forgot to put the tool link in here, so I'm going to add that now.
Oh, for the that tool. Okay.
Yeah, and we went over our half-hour mark, a minute late, but there's a lot of information to go over. We have 1 watcher and no questions. Do you show anything on your end?
Yeah.
Any questions or anything?
No questions.
Cool. Then I think we're going to call it a day, and we'll be back next week.
Okay. Yeah, nice and short. I like it.
I thought we were going for half hours now.
Yeah, we're going to do half hours. That sounds good.
Cool. We'll end the stream now.